Okay, traders, good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 27th. Mike Boutros with you on the horn. Jay, good morning to you. Steve, Tiffany, Pete, John, great to see you guys in the room. So, interesting price action. We got Fed on tap tomorrow, and I'm loving where we're at. DXY is coming to a big lateral level of support, Euro at resistance, Aussie coming to a very decent region, defending some highs there yesterday as well. Kiwi still think has got a little bit more to go. We'll hit sterling, gold, dollar CAD, and an interesting setup on that Aussie, sterling Oz rather, continues to pay out. Nice pullback, and we've been tracking that one lower as well. Any other questions? I kind of ran through those. Let me know, guys. DXY, Euro, Aussie, Kiwi, Sterling, Gold, Dollar CAD, and Sterling Oz. All right, so where are we with the DXY? I'm going to go just hit this real quick first. So we started off the week, right, into the Sunday open, talking about this key region of support that we're still trading into right now. I noted it yesterday in the webinar on Daily FX. We went over a lot of these crosses. We've just tightened that defense, okay, over the last 24 hours. So 90, 82 into 91 is the 2017 swing low, 618 of this year's range. We're on the third consecutive weekly decline. This would be the fourth, depending on how we close. And we've also marked a decline of more than 3%. So it's been a pretty decent run for the Bears and takes us into support at this level. We're looking for a weekly inflection off this. Daily chart had the same highlighted range, 90.82, 618, just lower. You have the slope for the pitchfork that we were in last year. We actually did probe just a little bit lower, still right in that zone right now. Here's what the intraday chart looked like ahead of the Sunday open. So we haven't necessarily broken below. We haven't necessarily inflected off yet. Here's what it looks like now. Here's yesterday's close, by the way. So we dipped, dropped into that trend line, and closed right back there again on a closed basis, right? Looks like a pretty decent defense. Intraday, haven't done anything yet. Here's what it looks like on the 2-hour. So no change to the levels. All we've done is simply kind of straddle this key range between 90.82 and the 91 handle, looking for a reaction as we head into the FOMC tomorrow. Hey man, no worries. No worries. Great to have you in the room. Better late than never. So the thing with tomorrow is this. Obviously, no one's expecting anything different on interest rates. There's no quarterly projections. There's no quarterly inflation targeting or dot plot matrix or anything like that. So it's really going to be in the control, question and answer period, the accompanying presser with Powell on what gives. At the end of the day, look for commentary on inflation. That's pretty much the only thing that might sneak up and bite the Fed in the butt in the weeks and months to follow. There's crazy amounts of money supply being offered up here, and it's going to be interesting. It's going to be interesting to see if the inflationary run that we're seeing, they've continued to suggest, and just so you guys know, their posture is this is transitory. We heard this back in 2007. We heard this back in 2012. As inflation starts to run up, this is just an inflationary thing. It's a transitory thing, rather. Near-term factors are swaying price, but the longer-term inflation picture still remains rather subdued. And that's their over-encompassing theme for why they're going to sit on rates and this easy money policy. So in any event, we're looking to see any kind of commentary with their outlook on inflation moving forward. And that's really what to look for tomorrow. From a trading standpoint, if this thing pops 91.42, that was kind of my line in the sand where you start to look for a larger recovery. But 91.70, the September low, kind of this swing zone here is really what you would need to close above to mark reversal. Okay, even if we break 91.40, it still would be just a near-term recovery within the downtrend. Even just a break of former trendline support as a resistance, you could easily come up, fail there again, and you're off to the next leg lower. Not my favorite scenario, but at this point, we're looking for inflection off 90.82. It's important to note as we've continued to, I'm sure Jamie has suggested as much the same. This is a notoriously cyclically bad month for the dollar, and we're seeing that manifested obviously in this dollar price sell-off. But those things don't last forever. It's not a constant sell. We're at support. Look for inflection here. A close below this region, and again, there's really nothing, in my humble opinion, until 91.13, 91.11. That's the February low day close, LDC, and a 786 of the advance off the yearly lows there. So pretty clean cut. If we do see the break, the risk for the material drop while below, all things held constant, that decline, you're at risk here. Now, interestingly enough, you look at DXY, and no surprise, you expect to see the exact opposite on the euro. DXY at support, euro at resistance. Here's the 618 of the euro's yearly range, pretty darn close. Here's the 618 of the DXY yearly range. So something's got to give. A little sprinkle something extra here on the euro. You have basic trendline resistance off the yearly highs coming right into that zone as well. And we're looking for inflection here on a weekly close basis. Anything northbound of 21 on a weekly close basis, and essentially it's a 100 pip run. 22.18 is the high week reversal close for the year. That's the risk with a breach higher here. All things held constant, you're at resistance. Here's euro on the daily chart. And here's what euro looked like last night. So the focus has been on this 618 as we've been talking about. Really quick before I get into the intraday chart, here's what the daily looked like. Whoops, sorry about that. And here's the pop higher. Phenomenal rally. It's been pretty radical. Here's the 618. Here's basic slope resistance. Here's the third touch confirming that slope. Euro resistance. Near-term support on daily structure is still 120. Okay, give it a little bit of a tickle down at 1991 is going to be essentially that opening range low for March there. But near-term support, more critical support. Okay, into the 1950s. Now you have, excuse me, the 38.2, losing my voice here, of the near-term range or the advance off last month's low. But you also have, look to the left. Look to the left. You got the lows from February, right in that zone, 1950. Keep looking to the left. It's the origin of the breakout. It took you into the yearly advance, or to the close of the yearly advance in December. Keep looking to the left. Pretty darn close to those highs that you made back in that September, August stretch. So really nice zone. That's critical support. You're already at near-term critical resistance. Looking for a play here in euro this week. Now, you do have inflation data, core inflation data on tap into the close of the week, as well as some GDP data for the first quarter. Again, flash GDP data from the Eurozone, but I don't necessarily think that's going to be the market catalyst. It's probably going to be more so what happens tomorrow with Fed. But here's what it looks like on the intraday. No change to the levels, okay? No change to the levels. Here's what it looked like, again, last night. There's that slope resistance off the yearly highs. There's the 618. Here's your weekly open. What do you do here? There's nothing here yet. There actually was a short signal for a downside play if you're really near term. If you're still holding that, I still probably would still be in that. Stops above 21, looking for a drop into the lower parallel or not that Friday low. But the point being, you're in a really near term weekly opening range right below resistance. 20 is what you need to break to give you sort of that test of that 1950 level bullish inbound. Okay, anything northbound of here, 2177 would just be a soft target. It's a nice pivot in price that we've been sort of eyeing out. You have channel resistance there. Key resistance still going to be into that 2239 region. But if it breaches here, there's room for a breakout, just as in DXY. So just when all hope is lost and you saw euro just continue to rip and DXY continue to sell off, and just as those trades are getting really popular, now you're at a region where if it breaks, that might even give you another leg. Now, that being said, it also puts you at big risk right now for the initial uptrend in euro, initial downtrend in DXY. Look for inflection here this week. Yesterday, I guess for the last couple of webinars, I've been bringing up the treasury yield chart. I've been getting a lot of questions on that. I just want to touch on that real quick again. Here it is. I don't know if this slope is in play, so don't focus on that per se. But this is the levels I was showing on the webinar yesterday. And what do we do with this? This is the daily chart. If we take a parallel of this same slope, something like this, and we extend it off the high that we made back in April 21st, last 2 days, I mean, today and yesterday, is exactly what we've been maxing out. Just watch this slope. Now, things are not going to always happen in yields in this type of technical merits that we see in more liquid assets, or I guess assets that are more widely technically traded, but it's something to focus on. It's something to focus on. We already noted 154. We hit that on the head. It's the 100 off the high. That was the low that we grounded out to right on that same April, what was that, the 15th decline. Support, support, support. If we break back above 61, 161, again, that would be the suggestion for continuation and resumption higher. This was just the slope I was looking at this morning. I don't have any conviction on this being a slope of merit yet, but we'll keep an eye on it. Long story short, that near-term channel we've been following off the high, again, looking to see this week, at least the initial focus is 62.54. That's the range you want to see break for guidance in treasury yields, and more so guidance in broader risk sentiment. SPX just continues to crawl and grind higher, grind higher. A lot of earnings on tap this week. Things could change. All right, so a quick note there on the 10-year and SPX. I got a lot of feedback on that. You guys seemed to like that yesterday, so I just wanted to keep you abreast of where we are on there. So that's DXY, Euro, Aussie. Number 3. Here's where we're at with Aussie. So by Aussie's part, it was just big resistance, and that's all we wanted to highlight, and that's all we've been talking about. And boy, oh boy, did it pay off, because it's a huge resistance level that held very nicely. Here's what the update looked like yesterday. Again, weekly resistance, it was 78 into 78.36. 2018 objective yearly open, 88.6 retracement. We talked about the debacle that we made here in February, March on that massive fake breakout with a huge outside weekly reversal, turned our focus lower. It failed at the yearly range lows. We're right back at resistance. Same resistance zone we talked about last year on the advance. We're there right now. Here's what it looks like on the daily chart. Nothing really has changed here. 618 retracement of the yearly range, 2018 yearly open. Again, 78.01, 78.25, key resistance. Got a nice little bounce off that yet. Hasn't materialized into anything, but what a great move, okay? A perfect example, guys, for anyone who's still kind of wrapping their heads around opening ranges. This was a perfect opening range break. Here's your monthly open. You set a low early in the month. You pop into a high. You try to go for the low. Monthly open support holds for 3 days. Break of the monthly opening range highs on the 14th, your ideal timing sort of mechanism. Looks for a late month high. You struck a high here on the 20th, and we even asked, we said, hey, was that the high? Just because it broke on the opening range doesn't have to mean that we have to close the 30th at the highs. Well, let's see if support holds. 77 was the level that needed to hold. That worked. Here's another stab. We actually executed a new high here. I think it was the same high. In any event, here we are at resistance. Here we are at resistance. Momentum right into 60. So worth a little bit of a pullback. Again, we have no reversal signals or anything like that. We're simply testing uptrend resistance. Here's what it looks like on the intraday chart. Again, the 2-hour. Here's what it looked like earlier in the week. So here's Aussie into the open. We rallied right into that zone. Again, nice exhaustion. Tap into overbought. Here's the pullback. Weekly open support 77.39. Bullish inval 77. Still has to be the objective yearly open. The range lows that we made last week. That would necessitate a break of this very clean ascending formation. And that's what's going to be our bullish inval. So the one caveat, like I said, it's similar to what we talked about, I think, with the euro last week, right? Do we still go for that stab into the 618 extension, the high day close, the upper parallel before failure? At this point, could happen, but we'll have an objective weekly opening range weekly opening range break when it does. So the weekly opening range is set just below resistance. We'll look for that break. If you get the pop, yeah, 78.70, 78.65 is definitely a possibility. Our favorite scenario, my favorite scenario, my humble opinion, I'm looking for exhaustion. Looking for exhaustion. So decent move here in Aussie, right off of uptrend resistance, right off of range resistance. You'd need to close above 78.25 to get this thing, or at least to unleash, open up that possibility for a 78.70 tap. All things held constant, we're at resistance. Can I see the March high day close? Can see the March high day close as support in the daily. It's possible, for sure. So you're talking about that. Yeah. I mean, so it's range resistance as is, 77.56. I like that level, Eman, who is that? Jay, I'm sorry. Jay, because you're basically looking at slope support there. So pullback right here, right, would put you right about, look at my cursor on the right there about that high day reversal close. Good eye. Good eye. All right, questions on Aussie. We're clear of Aussie data this entire week. Heading into next week, you do get the RBA pretty early though. So we'll be looking for some commentary there to possibly give us a catalyst move, but all things held constant. What a beautiful range. We're at range resistance. We've gotten the initial pullback. See how Aussie plays down here. Last thing I wanted to update from yesterday was Kiwi. Not as compelling in my humble opinion. I do like the levels, but for me, it would have been a sweeter move with a tag of 72.65. We didn't quite get it yet. Here's Kiwi dollar starting the top down on the weekly chart. So 72.29 was the high week reversal close. Big level. Last week it converged on former trend support, turned resistance. This week, not so much, but here we are. So, I mean, what do you do here? If this is a 5th week consecutive advance, that's a V, if I ever saw a V recovery, right? So while the break below 71, if you guys all remember, for us, that was a break of the yearly opening range. Plain and simple. Here's your yearly open. Here's your yearly range low, January, February. Tested again in March, break. Right into those highs from 2018. We didn't even make a full 100% extension. And now we're right back above that. Does that dismiss, nullify the break of the yearly opening range? That's what we're trying to assess now. That's what we're trying to assess now. So for me, I'm a little off here on Kiwi. Put a pistol to my head, I would still want to see a break below 71 to validate, all right, it's just the recovery got a little bit more stern than expected, but we're still heading lower. I don't know. Weekly chart has me off here. I'm looking for a pivot at 72.28. If we close above that, forget the downside. For me, that would be false break type of play. But what a false break, man. That was like a month-long false break. If you can see the indecision in my voice, it's because it's there. I'm not a big fan here. But what I am liking is the breakout that we saw on the daily chart and trying to gauge that extension. So here's Kiwi on the daily chart. Again, there was a break of the yearly opening range, turned our focus lower. We were looking for a drive into the zone. It touched the top end of it. Here's the break back above. Now this advance hasn't been the most compelling divergence, but the divergence signal is starting to manifest. Getting a little tired. Two regions of interest that we talked about ever since the break back above 71 was 72, which was a 618 extension off the low, and this zone, 72.65 and the 72.80, 87. It's the high day close for January. It's the 618 of the drop. It's the mid-month highs from last month, all right here. So didn't quite make it there yet. I don't have a big resistance zone for why I would be turning here. There is a lateral level on the intraday chart I'll show you in a moment, but before I start to operate on it, I want to see something happen at a more critical, more operable level. Here's what it looks like on the intraday chart. Okay, and here's what it looked like earlier in the week. No change. No change. There's the March open, 72.35 resistance, a little bit of a touch there. Weekly open support at 71.88. There's the sweet spot. That's the spot I would have liked to see a little bit bigger of a reaction if we do get a stretch higher, and we still could. 618 of the yearly range. DXY made it. Euro made it. Aussie made it, right? Kiwi, not quite. So if we do get a stab higher, that's where I'm interested in possibly trying to fade this kind of move. Anything sub Friday's low, so the weekly open is 71.88, but if you take Friday's low, 71.65s, so basically you need to break that slope, you need to break that low range. I think that's where you open up the bigger risk for a pullback here. All things held constant, guys, we're just setting up a pretty clean, tidy weekly opening range. All right, but the slope's pretty clean. All of these parallels here, guys, are derived off the origin. This is the original slope. Take a parallel. Take a parallel. We don't have anything to extend this off of, right? This is just off of this reference point here, but it continues to highlight key resistance. Again, no data out of New Zealand worth of note this week. Heading into next week, we'll talk about it at that point, I guess, there, but we do get some employment data out of New Zealand. Till then, watch the dollar to be driving this thing. Questions on Kiwi? Number 4. So for sterling, it is an interesting play, no doubt about it. Here's the British pound. The levels have been right on, right on. Here's the British pound as it looked earlier. This was, I guess, into the weekly open on Sunday. We had just reversed off of big resistance last week. The pullback completed 2 equal legs right into 138.25. And as we were starting the week, we said, watch. It's either a drop into this zone and we'll look for a bigger inflection there, or if it rallies, it needs to fail ahead of that 618 if we are still heading lower. So we opened up the week, we pushed higher, that 38.2 got taken out pretty quick. Here's the 618, April opening range highs, nice confluent zone, caught the highs, and now that's the weekly opening range high. Key support still at the 100% extension, that's 38.25 into 38. My favorite fib confluences, guys, 100% extension off the high, 618 retracement off the low. Beautiful spot. Slope support's right in there. That's bullish inval. If we get a break below that, I think sterling washes out a lot harder. Unfortunately, while above that, you're still constructive. Remember, this thing broke downtrend resistance earlier in the month. It popped through the monthly opening range highs, which suggests we should be looking for a late month high. But then we failed right back into this high week close. So this is the zone of influence. You're still constructive above 38. Breach above 39.40 is what you need to mark resumption. Sterling's got everything set. Everything's set for FOMC tomorrow. Levels are very, very clean with the weekly opening range shaping up right above slope support. You don't get these very often in sterling. So again, here's what the intraday chart looks like. Remember, I told you guys I'm not really a big fan of this slope, and I still am not. You know, there's a couple different renditions on it that you can work with, whether you work with that low or I've been working with this one. Neither of them are, you know, really that impressive, to be honest with you. But the lateral levels have just been clockwork. So keep your eyes on that. Quiet sterling, but the range is clean. And we'll move over real quick. I was going to go over gold, but I want to just backtrack real quick and hit pound Oz since we're talking about pound. So pound pulled back from big resistance. Let me take a step back. Here's the big resistance zone, right? And even if you look at this on a weekly standpoint for the British pound, this came into massive, massive resistance last week. 140 pulled back. This is the high week close for this year, the high week reversal close for this year, right there. So where's that put us on pound Oz? Pound Oz on the weekly chart looked like this. This had broken, came off its resistance zone a couple weeks back, and the break of uptrend support faltered early in the month on that drop into the 618. This is the longer term 618 off the 2016 low, right? And we've been kind of in this no man's range ever since. Here's pound Oz on the daily. Okay. Big reversal. We talked about that pullback. Loved the break of support. Kind of got faked out with the rebound getting a little bit higher than expected, but look at this 618 touch and perfect pullback. Here's the intraday chart and the scalp we've been following. And here was our last update. Here on SB, pound Oz. Okay, this was last week. We had broken uptrend support, that channel, that rebound off of the critical support zone that we had highlighted between 77.50 and 77.30. The yearly open, 100% extension, 618s galore. Really strong rebound off that we highlighted last week. Here was the break. Initially looking for inflection at 78.80. We got the pullback into 78.80. We closed the week there. It was support into the start of this week. Then we crashed lower. That same level, yeah, that's now being tested as resistance. So it's not the weekly open for this week. I literally wanted to leave this here just so I can kind of hit it again and see how, and show you how last week's level continued to play out. Perfect tag, support break, acceleration, here's resistance. So all things held constants, at this point, we've now set the weekly opening range. We're testing the weekly open, which is going to be resistance just higher. Let me move this now to the actual weekly open. And the range of influence, the weekly opening range is now set just below that upslope, or excuse me, that downslope. So this is the range of influence here. 77 is still massively important. Like, we can't downplay how critical this range is. If we break below that, there's really nothing until like 75.30s. So this trade I thought would be super interesting heading into the close of this week, not only because of where sterling is trading up against the dollar into resistance, but also because of where Aussie's trading. Basically, take a check, strip the dollar out of those trades. It'd be very interesting to see how this kind of pans out. Who's the biggest loser, or I guess who's the biggest winner in the case that the dollar flips over. But pretty clear and compelling levels here in pound Oz. Questions on that random cross that we've been following for weeks now? Someone here brought it up in the room. I think it was Marchin. I don't know if I see. Yeah, there you are. But it's continued to pay out pretty nice here. So pound Oz interceded 1, 2, 3, 4, 5, and that's number 6. Okay, number 7. Here's gold. So this thing, it's do or die. Okay, the resistance zone is 1875. There's a lot to look at there. Namely, here on the weekly chart is just the opening range lows for the year that we made back in the February drop there. But there's so much more. There's so much more. Upslope for the original slope from 2018. Resistance, resistance, support, break, acceleration, resistance. Downslope resistance for the current operative channel we've been in off last year's high right there. 1875 is the weekly level we need to focus on. Here's gold on the daily chart. Now, the close low for that initial February drop was 1794. That actually caught the stretch very nicely on a closed basis. You have uptrend resistance. And on a closed basis, like I said, we've been marking, it's not divergence just yet, but it's tired momentum. So what does this mean for us right here? Well, the focus has been on a break of this exact zone, but that's been the focus for the last 7 days. 1765 into 1794 on the daily chart right here. Breakout zone, it's got to be 1804. Breakdown zone, it's got to be 1750. Here's the intraday. Plus the 2012 high. Jay, 2012 high. For gold, you don't say. Get out of here. Nice, nice. Thanks. Sometimes it pays to go back that far back. Yeah, I mean it matches up this whole cluster range. I mean, I guess after that, the all-time record high got shattered. I kind of stopped looking at those stretches, but sure, fuel to the fire, right? Fuel to the fire, big zone of resistance, and that's been our focus ever since the start, or even into last week on the rally. Here's what the intraday start or the intraday chart looks like in comparison. Here it is. So here's what it looked like last week, and here's what it looks like this week. 1794 held right into the close. Key support 1794, as Jay just added, it's also the 2012 high. It's also all that stuff that we just noted. It's also uptrend resistance, right? What I was saying in the webinar yesterday, and I still want to leave that out there, especially because we're heading into major event risk and we do have the Fed on tap. If we were to jackknife higher, you can't rule out one last probe into 1804 just to screw everyone and then reversal. And that would be 2 equal legs higher off the low. So what could charge something like that? It could be some inflationary talk. You could hear them say, whatever. I don't even want to speculate, right? I hate Fed speech, but or central bank talk in general. I think it perverts markets. But in any event, if they do say something radical or he says something off the cuff, 1804 is kind of my line in the sand. If that gives out, it's straight out resumption of the uptrend. There's no point in trying to fight it. Be an accelerated breach of uptrend resistance. That's typically the sharpest part of the rally. So it's all about 1804. I do think you risk topside exhaustion ahead of 1804. It needs to be a break below 1751 to validate sort of the turn, as it were, or a larger reversal pattern in gold. All right, questions on gold? I see you guys in here. I see my gold traders in here. You guys are quiet. I don't know if that's a good thing or a bad thing. Just keep in mind, major event risk on tap tomorrow. It's always these Fed things. You'll get that ranging lull in market volatility, especially tonight into the Asia session heading into tomorrow. So that is gold. Last two I want to update on my end, and March, and I see your long list there, and I will hit it in a moment. But let me hit dollar CAD. Actually, we hit pound dollars already, so one more. Here's dollar CAD. So I'll be putting a piece out on Daily FX today on this. Listen, if this break is legit, this is kind of devastating for dollar CAD. The level is 24.75. We've been talking about that level for a while. That's the weekly close low, not the low we close, the close low. so far for the year. It's the 618 of the rally off the yearly lows. It's slope. It's this right same pitchfork slope extending off the lows that we made back in 2019. Boom. So 2358 is your next sort of weekly level to even look for. Here was our last update on dollar CAD. Keep getting my pages messed up here. And just what a radical move. Everything changed last week with that singular day move. And that was right here on the 21st. Why? Well, objectively, guys, that one day covered the entire monthly range. You can add on it that it was an outside day reversal, which is pretty bearish. But the fact that that outside day reversal took out the monthly highs and closed and pushed into fresh monthly lows, that's as bearish as it gets. Now, despite the fact that that happened, just goes to show you again that those technical developments don't necessarily have any type of delineation with time. Just the fact that that happened, it still took 2 days where we didn't break support and we stood right there. And I was actually thinking to myself, after a reversal like that, the fact that it still couldn't break support, that says something. It says two things: the strength of that support level and the strength of the inflection that we should see off it, meaning if it breaks, you should see it in an accelerated drop. If it ultimately holds, you should blow past the upside. Didn't think that was going to happen because, again, the severity of that outside day reversal was pretty impressive. Here's the break. So close low for the year is at 24. We're trading there now. I do have this March trend line slope in blue. If you just look at that, that's from the highs of last year. Highs that we made back in October. Resistance, resistance, break, support. We're there now again. Could see a little pause, could see a little interruption, but boy, oh boy, this thing is bearish while below 2484. Another really nice example of a monthly opening range break to the downside. Looking for a late month low, only got a couple days left. Okay, that's from the daily chart on dollar CAD. Here's what it looks like on the intraday. So some levels, just to keep a focus on, nothing's changed as far as the downside levels here. We've taken out both of these at this point, which was 24.21 and the 24 handle. The next level on the downside, you have the swing low, which comes in just ahead, but I have an 88.6 at 23.58. The swing low, which I didn't have highlighted there, guys, just for reference, is like 23.65. So it's just that basic region there. Near-term resistance, I leave at 24.21, bearish invalidation, key resistance right at former support. That's basically at 24.90. Okay, it's the weekly opening range high. It's the weekly open is in this zone as well. Former support, it's loaded. So scratch that. Actually, this retracement is, it still has merit because it's still the lows, but resistance, next downside break, initial resistance. Questions on dollar CAD. Looks like the breakdown finally materialized, guys. I wouldn't want to chase it lower from here if you're not already holding shorts. If you are already holding shorts, just tidy up. Tidy up, chip a little off, bring those stops to break even or better. At this point, if you're holding anything short from last week, I'd have stops just above the weekly opening range high. Anything northbound of that, yeah, you could recover pretty quick. All right, so a lot of people will also be looking at crude prices as they look at CAD because of obviously the corollary sort of pin that everyone likes to drop on that. One thing I'll say, yes, we've had a very nice rebound in crude, but it happened at a very nice area as well. I was looking and I showed you guys this chart, I think on Thursday or Wednesday rather, right before I left for surgery there, but the whole point was to look for an exhaustion low ahead of the 60 handle. You didn't quite get that low, right? 60.58 was the low you droughted last week. here into the start of the week. Again, it tried to make a probe, trying just to get towards that slope. It didn't get it. Here's your test of resistance. Watch this here today at 62.60. Major inflection in price, has been for quite some time. Okay. And that's everything on my list. Let me hit Mr. Marchin's list here of pound yen, euro yen, pound Swiss. Ooh, an euro pound, really? Okay. Okay, I'm gonna hit that in order. Ready? Here's pound yen. We're probably gonna have to put some stuff together here because I haven't looked at these in a while. So bear with me just one moment. Pound yen coming off big resistance, uptrend resistance on divergence. That was a beautiful, beautiful turn. If you guys want to look for sort of ideal divergent signal examples, this is where it's at, right? 3 points of reference, higher high, higher high, higher high, lower high, lower high, and it's at uptrend resistance. That's beautiful. You had an outside day reversal off the highs. Where'd this one come from? Nice turn lower, and we've been sort of sitting there ever since. So let's do this. Here's your yearly open. So it could be a near-term consolidation. It could be a couple of different things. I already see it now. If I look online, people are going to be calling for head and shoulders on this thing already. Either way, I do think it looks a bit toppy. It looks for a risk for a correction. But right now, Marchin, you're trading mid-range. Always important to take it back to just basics and seeing where you are from a trading standpoint. This is mid-range for the week, or for the month, rather. Here's your monthly open. Hmm. And this is going to get messy. Just bear with me. I just want to see what this would look like. Too tight. I don't want to stick with this slope too much, but my point being is this: you want to look for possible topside exhaustion on a rally ahead of 151 would be my play on that. It looks, again, the threat of a larger turn here. And if we do get a broader risk-off trade, yen strength could be the bid that pulls us lower. Sterling is doing its own thing at resistance. It's an interesting trade, Marchin. I'm glad that you brought it to my attention. I will be looking at this one with great intent now. Again, bullet to my head, it sees some sort of recovery, and you look to fade that. Ultimately, for a bigger spill, 147.95 area, slope support for the better support bounce. But turn off of uptrend resistance is how I'm looking at this. So you're interested in the sterling crosses. Sterling Swiss, have you asked about that one before? I'm not sure. You must have, because I have some sort of analysis here. Okay, and that's still holding basic slope support here off the highs, or off the lows rather. Monthly open. Yeah, that looks, again, not a trade recommendation from me, but that does still look bearish to me. So we haven't looked at this in a while. Let's see what we've been stoking out here. Hmm. Hmm. So here's how I would look at this. Okay. Interesting setup, Martin. Um, so the weekly, let me put it this way. The weekly opening range, this one's super tight, right? So if we just look at the weekly open, what was the weekly open on the 25th? Right here. You're super tight, right above slope support. This pitchfork, don't give too much merit to, don't stress it just now. I'm just using this as sort of a reference tool for guidance on where we are off resistance. But it's all about this gradient here off the low. And here's your weekly open. If you breach higher, the 38.2 last week's high, depending on where we are in time, if you do find confluence with that slope, would be a sweet spot for failure, but ultimately a 26 break, a break below 25.75, basically that swing low that you made into the open for February. That is actually the February low or the March low. That's the break that would unleash, I think, a much larger decline. A basic 38.2 of the range gives you 23.20s. So it's a big, like 300 pip drop if it breaks. I just think at this point on the magnitude drop here, you do risk like one more pop higher. So for example, if this is a 1, 2, 3, 4, 5, you would assume a corrective stance off the low that could give you something like boom, 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 and the 100 kind of converges somewhere up here. You know what I mean? Then sort of the resumptive move. But very interesting on that drop from the monthly open. Essentially taking out all of last month's range, and here's last month's low. So look for topside exhaustion ahead of 29 is kind of what would be my just basic game plan on this. A break below 26 would be kind of open the floodgates for a bigger setback. Does that make sense, Martin? That's pound Swiss. Interesting trade. I haven't been really taking a look at what's been going on with Swissy. Here's dollar Swiss. I kind of lost focus at this. I was looking at it last night. It's neither at support, it's neither at resistance. I'm not interested in Swissy until we get to 90.90 or if we get back above 92. Everything in the middle, I think, is just going to be noise. So a little quick note on that. Euro pound looks like this. And I have that at near-term slope resistance as per the formation that we put together. I think it was last week, or it might have been even earlier. What is this? Nope. So broadly speaking, I like the trade higher. I think it's at risk for topside exhaustion. I think you're looking at a similar setup to where euro is, right? Stretching right into that key resistance zone. I think it's a constructive trade, but it's at resistance. The bigger play would be 87.85 if it got into that 38.2, specifically as it converges on that slope, basically into the close of the month. But from here, I don't have a move on this one. Don't have a move on this one. Be more interested in fading a tag of resistance, or yeah, I mean, there's nothing to take a defense against, even if you want to try to play the long. I mean, you could take it against this low right here, but it could just dump right into the median line, then move on again. Don't like the positioning of where we are. Broadly speaking, you're checking some major swing highs. A breakout from here, I still think you look at 87, 85, this zone here. Forget this 618, something like that. And just for reference, give me one sec. Hmm. Boom, boom. On the upside. Bullish inval on the downside. All right, just real quick frame out there for you, Marchin. Feel free to take a snapshot of that. It's an interesting setup. I mean, the reversal off the low is pretty nice. Was pretty nice. So what you're trying to gauge here is the stretch, or the magnitude of the stretch, how much the stretch has left. If it's going to stay constructive, 85.67 is the level. On the upside, this is like super danger zone. Once you get into 87, 80s, you're talking about some serious resistance. All right, did I get them all? Last but not least is Euro Yen. I got you. Euro Yen, and we'll wrap it up there. Here is what Euro Yen looks like. Breakout to the upside, fresh yearly highs. 131.40, decent pivot. Moving forward from here, this is null and void. Don't need that. 618. Okay, so that's the weekly chart marching on the euro yen. Here's the daily. Pitchfork off the low from last year has just been insane. This thing has been clockwork. Wow. All right. Clean breakout. So clean breakout. So margin, this one's an outside day reversal off the lows for essentially a test of the monthly range lows, but this was pretty big. Highs for March comes in range with this month's opening range high. That's 30.66. Needs to see a close above that here today. You're already at 30.92. But certainly we'd want to see a close above 30.66 to keep the upside in focus. Now, from a daily standpoint, there's really nothing like major resistance till closer to 32. So this is the July high day close. So like immediate levels of interest. All right. So look, this is a Euro cross. This is just what this thing does. I'd be very cautious here. Yes, on initial look, it looks like a breakout. On an opening range break, it looks like a breakout. On an outside daily reversal that we made here, I guess this was Friday, it looks like a breakout. Here's those swing range highs, as it were, for the year. 131. Break through 131. I think 31.60 July high day close, a decent level to look for. 32.56 would be a more critical zone. But here's the thing, don't go chasing here. There's no positioning for a new fresh long exposure from this level, in my humble opinion, with a decent stop. Weekly open weekly open support should hold if this breakout is legit. So like 30.47 on any type of corrective pullbacks intraday should be the stretch low of the session. If we are heading higher, but 31.60 is gonna be your first hurdle there on the upside. All right, full session here today. I got your money's worth marching. Hope I got all those setups for you. Guys, use caution heading tomorrow, okay? I don't think we're gonna get anything earth-shattering from the Fed, but really the inflation talk of the town is really what everyone's focused on. So with the dollar trading where it's at, watch that resistance zone for Euro, watch this support zone for DXY. We're looking for definitive inflection here today, into tomorrow, into the interest rate decision, and we will touch base back on Thursday morning, see the aftermath and see how all this works into the close of the week. You do the work for Hey Marcin. Cheers. Have a great day. Jay, same for all you guys. I will see you on Thursday morning. Cheers.